market outlook. Let's take a look at what I'm watching for this week. Those of you who are brand new to watching the Your Market Outlook, Todd Brown here, and happy to have you. What I do is I come in and I show you the trade setups and signals that I'm watching for the upcoming week. We'll review those through the week, and then typically we'll do some type of a review of the week that was towards the end. So thank you very much for watching. I hope you enjoy it. Also, be sure to tell me at the bottom of the page if you want to take a look at specific stocks. We'll typically cover a couple of just perfect qualified setups where markets have reached key price points. One of those is the one we're looking at right here, which is the British pound at 7-year highs. We'll also cover some of the things like spiders, the Qs, the diamonds. We'll look at the futures markets for key turning points in that market as well. And then I'll show you where I'm looking at swing trades or where I've identified high probability trading setups for swing trades, even intraday. First and foremost, the British pound. We looked at this thing 3 to 4 weeks ago as we tested right here. So as the British pound rallied, we noted that we were at a 7-year swing high. We talked about this being the initial sell. Stops had to go above the swings high right here. And the swing high right here is 70.43. So we talked about stops at about 70.65 area, allowing a 20 pip move above that swing high. So as we popped up into here, took the short entry from the 67.90s. You see we got a 250 pip pullback. And then we popped back up, took another short, profited there, and then as it went against us right here, actually added to the position. Now let's take this chart and we're going to take it from a monthly down to the daily. And you can see that we had a previous symmetrical double high. At the same time we're doing that, we're going to take a look at the 60-minute in the background. Here was the spike high on that same British pound. And you'll see that, number one, I got a qualified sell signal right here on my internal strength indicator, followed by black bars right here. So the black bars obviously are bearish sentiment. The white bars are bullish. So as we drove through here, this was our first trade below big momentum. We then rallied back to the big momentum right here. And I have my turning point black tip sell followed again by a black candle. So real tradable on the way down. We recently drove to new structure lows, outside return, lower high. And again, note, I got a qualified sell signal here followed by this double top. Now you see that our big momentum has shifted and rolled over. So right here, I'm going to do an intraday swing sell. Short entries with stops above 69, so the risk will be about 70 to 80 pips. And then from the short entries here, approximately 68.40. Target 1 will be 100 pips at 67.40 for a retest of these lows. And then obviously I'll look to follow that for a trade continuation. We'll reference this bar right here. That's our daily. So you see the daily has pulled back now off of that spike high at 170s, and we had a real nice 250 pip pullback, but we are finding structure support. So this will be a key area. If we can roll over here through that 67.40 and get a swing close below this guy right there, then I'll look for the move back to the 64.50s. Now, longer time frame, big picture, we're looking for a move back down to the 151s. Clearly, it's going to take a while, as you see that we've been in a bull continuation pattern from 158 since September of 2013. So plenty of room to run right there. We were looking at FXB, which is the British pound ETF on the equity side. FXB puts, pretty thinly traded, so we're a little bit cautious there. So anyway, I wanted to show you that, just a checkup on that signal. Beautiful low risk, high probability, and all of it occurring at that major 7-year high. So that's the British pound. Now I'm going to pull in another market real quickly. All right, so that brings us to SPY, the spiders. Now this is the daily bar right here. So let's go grab a quick look at our weeklies. And I want to show you that we're putting in a symmetrical double top on the weekly chart. Okay, so here's our symmetrical double top. We go swing high, followed by the anticipated higher low. Then we retest that previous swing high at the 189 handle. Now we're going to take a look at two different legs up. First and foremost, we'll take our extension. This was the swing low that preceded the rally to that high. pull it back down. You see we came in just shy of our 127 extension at 190.50. Number 2, we're going to go here and we're going to use the extension. I'm going to invert from the last static swing low here. I'm going to look left to the swing high, pull that back down, and you'll see that we came in at the 1414 Fibonacci extension of that last leg up. So I'll pull this in real quickly for you and you can see that. Now, with the symmetrical double top right here on the weeklies, we'd look for a close below this weekly bar that's forming over here on the right-hand side. If we get that, then Katie bar the door for a sell-off. Minimum move right here would be $5 to $6 back into the 181s, and then probably 174s, 175s. Okay, so there's our weekly picture right there. Nice symmetrical double top. Pull it back into the daily. Daily put in the nice double top right here. We had a qualified sell. A 3-day move right here for about $5. Retested right here, posted the qualified sell, another $5. Nothing recently until here. So you see that after this we had 14 days where we got the trade below, close below, a little bit of a fake out. They popped it right back up and again gave us a symmetrical double top here with a nice doji lower close right there. The next day we open at 87.15. We make a low 2 days later at 86 and right back up. So again, all of this right here, traders, is just like that GBP USD. Okay, anything against this 189 with qualified sells produces just that. Part of it intraday. If we get a pullback down to the 186, 187, we're going to take partial. We can buy SPY puts against here. And then obviously, if you're long the stock, could get flat the stock until we trade above these previous highs or trail stops. We're going to be buying puts right here in the SPY. We'll watch the open, and then we'll see where this guy trades. But as soon as this hits 89 intraday and then 89.50s intraday, we'll watch key price points in the S&P 500. We'll be buying SPY puts. Let's pull it up over here on the same 60-minute chart that we used. So we'll go SPY here. And you can see that as the market rallied, we got back into that price point. In fact, let me go look at the S&P 500 real quickly. All right, now let's take a look at this Dow Jones chart real quickly. I've got the 3-hour chart up, gang, and you can see the last time we rallied back above this level. So what's been typical in this most recent rally is this retracement trade right here to my Big Mo. We put in a symmetrical double bottom right here with bullish divergence in both my internal strength indicator and my Stokes. And then after that, we pop. Then we pull back again here. Again, same symmetrical double bottom, bullish divergence, we pop. So we just came back down here, put in that same symmetrical double bottom. You see the left side test, the right side test, and then a third test here. I just bottomed down here. I'm currently long. I took my scalpers out for about 12 ticks is all, 12 points in the Dow. And now if we can get above this most recent lower high, this is forming our double bottom right here. So if we can trade above, close above, then we'll look for the retest of this 16.7 handle. So Dow 16,700, these previous swing highs. Now again, here's the classic trade for us is this guy right here. See that symmetrical double top? And again, I want to show you why this is relevant. As I pull this back down, remember previously we took 2 different swings in our analysis and we did our Fibonacci extension. So I'm going to take my swing low here, pop it up to this high. That was the impulse move that preceded that rally. And you'll note that we came in right at the 1414 Fibonacci extension. So I'm going to pull this guy in, click OK. 676. Majority of these trades we went to 95. So about 20 points through that, put in a nice double top right there, stops above the 1618, and then the retracement trade back into the Big Mo. So beautiful qualified setup and signal right there. Now I was going to show you the S&P 500, so let's go grab ES 614. Got my swing DSR loaded here. We'll pull this in, take a look at where we are there. For those of you that either trade the S&P 500 or trade possibly spider calls. Now, exact same setup we just noted on the Dow Jones right here. The Dow came back down, almost retested the lows. S&P a little stronger. And again, I'm going to watch this right here intraday. So if the S&P 180 closes above this last swing high, which it's testing now, then we'll look for the press back into S&P 1900. All right, so that'll cover a couple of really key price points across the board. Again, be sure to left click on the button there or sign up for this on the page that you're watching this. You can stay engaged. I do between 4 and 7 videos a week. Primary thing is just to show you what I'm watching intraday. Let's go check this guy. All right, I'm going to trail the stops here real quickly. Now again, I did this as a swing trade. I already took off my day trading position. Now I'm going to trade the balance of this for a swing. Now again, you can see right here on my Brickwick bars, as I look left, this gives me a great indication of what's coming up on the swing side over here. So I'm going to drop this in at that 485 handle. This is a visual reminder for me during the day that we'll be approaching my extended target for the swing portion. And then I'm going to trade one more pullback on this intraday as well. All right, gang, we'll see you at the next update.